Today we are going to look at the charts within Voyant, and we're going to do this using a pre-built plan, and we'll be using the Let's See single chart. The first chart we're going to look at is the cash flow chart. Each bar on this chart represents a full year within the plan. If the bars are blue, that's good. That means we can afford everything we've modelled into the plan. If the bars are red, that means we have a potential shortfall and they are not on track to meet their objectives. We can also see in the chart that there are two lines running across the chart, a blue line and a black line. These are the need lines. The blue line is the basic need, which includes anything we've modelled as a high priority, such as essential spending, but it also includes taxes and national insurance. And if we had any life assurance premiums in the plan, it would also include those. Then we have the black line. The black line is the total need. This includes not only the basic need, but also items prioritised such as leisure or luxury, for example, discretionary expenditure. It also includes any contributions to pensions or investments, as contributions are treated as non-essential, i.e. if you can afford them, the software will make them, but if you can't, it won't. In the early years of the plan, while they are working, you can see that the blue bar goes above the total need line. This is surplus income, and as we hover over this bar, you can see the amount of surplus income pop up, and it will show you the availability of not only surplus income, but also the amount going to savings. Now, this surplus income is in addition to those savings, and as a default, the software assumes that the surplus income is spent, and therefore it will disappear out of the plan. You do have the option to change this in your calculation settings to transfer all excess income to savings, or you could set up contributions to savings, investments, or pension accounts. Now let's add the details to this chart. And we will also ensure we've got the legend, which shows us all of these details. If you want to turn the legend on, you simply do so by clicking on the three dots and select the legend. We'll hide all for now. And what we're looking at are the total expenses within the plan. And this shows us what is going on through the entire lifetime of the plan. So how are we going to pay for all of this? Well, at the start of the plan, in the early years, we have the employment income. Next, we have savings and investments, which we're going to dip into until we get through to our pensions and our state pension. As I mentioned, now we're in retirement, we can start drawing on our state pension and our money purchase pension. Now, the last item that we've got in this plan is a tax credit. And as you can see, this tax credit will fall above each of the blue bars in the early years of the plan. And what is the tax credit? In this scenario, John is a higher rate taxpayer and he's making higher rate contributions to his pensions. So therefore he's receiving tax relief as in the form of a tax credit. And that comes back into the plan, and you can see that within the cash flow. So this cash flow is looking healthy. But let's look at the assets chart. Now, as you can see from the assets chart, we have the property, which is the purple. Now, let's just remove that for now because that's non-liquid. Let's look at liquid assets. And as you can see from the plan, in the early years, as they're in employment, they are making contributions to their pensions. And this is building throughout the time until they reach retirement. And they will start to draw on not only their pensions, but also their investments, which you can see in blue at the bottom here. What we also have within this plan is a little pink entry going all the way across the plan, and this is their savings. Now within this plan I set a withdrawal limit to prevent all monies from leaving that savings account. So I had a minimum balance of £20,000 added to the plan, and that is going throughout the plan, as we can see here. Now let's add the property back into the plan. Now we're modelling growth within this plan, and this is in nominal terms. If we hover over the plan at the end, the last bar within the chart, if we hover over this, we can see that the total assets are over £4 million. But as I mentioned, this is in nominal terms. If we wanted to give the clients a bit of a reality check, we can do this by looking at this in real terms. If we switched on real money, the chart will redraw, and you can see again, if I hover over towards the last line in the chart, you can see that in real terms their assets are now actually worth just over 1 million. A little bit different to the 4 million that we had within the plan. What you can also see in this chart is the CPI is set at 3%. And as I've modelled the property growth at 2.5%, you can also see that during the lifetime of this plan, the property is decreasing in value slightly over the period. Let's have a look at the expenses chart. And again, we'll hide all. As the clients are working, they're paying a lot of tax within the plan, as you can see from this graph. Once they reach retirement, they're still paying a little bit of tax, but not as much as they were in the early years. Next, they also have their basic expenditure, and they also have their leisure expenditure. Now within the basic expenditure, we have a spike in the beginning of the plan, and this is where we modelled a new kitchen for Jane and John. Last in the plan, we have other. Now other expenditure at this point is their pension contributions, and as you can see, they stop when it gets to retirement. Next, we have the debts chart. The only debt that these clients have is a repayment mortgage. And you can see that over the course of the plan, this is reducing and is finally paid off at age 86. The other charts that we have are the net worth and the plan worth. The net worth excludes trusts and the plan worth includes trusts. As these clients have no trusts, they are actually identical. The last chart in the plan is the taxes chart. Now again, if I add the details, what we can see from this chart is the majority of the information is due to income tax and national insurance. However, what we can also in this chart is there is a small amount of capital gains tax, which is the blue. Now each type of tax within this chart will be given a different colour. So for instance, if you had a lifetime allowance tax to pay, you would see a yellow spike within the chart. You can also show on your chart how you can add value to your clients. You can do this by looking at their assets in a tax efficient way, and you can ensure that you're using their tax allowances, as evidenced in this case with the CGT that we've been incurring. Now if you wanted to see the chart, not only can you use the drop down, but you can also use the arrows at the sides of the chart, and you can move through them if you're using a tablet, or if you're using a laptop, you can still access all of the charts in the same way. Let's go back to cash flow. Now if you wanted to see the details behind each bar on the chart, you can go to Year View. Year View will give you the details behind each bar on the chart, and you can see this by moving the slider across to any given year within the plan. So if we wanted to look at retirement, we could, and we could see beneath that the cash flow, any of the expenses that are component out of the plan, the investments, pensions, property, debt protection and taxes. But let's go back to the beginning and let's have a look at the cash flow. So we can see in the first year, in the first part of the plan, we can look at their employment income. So Jane and John both have income coming into the plan, and we can see the value and who the owner is of that employment. Next, we have expenses. Now, under the expenses tab, you can see income tax, national insurance, but also any contributions they're making to investments or pensions, their basic expenditure, leisure expenditure, and finally their mortgage payment. Now, as you can see, each type of expenditure is given their own colour. What you can also see is if any of the expenditure items have not been fulfilled, and that will appear here. So if you've set up a basic expenditure and there is insufficient income coming into the plan, you will see that a portion of that expenditure has been unfulfilled. Next, we can look at the investments. Now, the investments and the pensions tab show you not only the end of year balance and the net growth for those policies, but it also shows you the contributions and withdrawals. Now, this is a good place to sense check what is happening in your plan. So if you set up a withdrawal to come out with a particular product, or if you've started contributions at a given point in time, you can move along the slider to that given point in time and you can check that you can see those contributions happening or those withdrawals happening. Now, if I move to the pensions tab, if I click on any of the pensions, each person, you can see that a more detail appears. And what you can see from this is I can see any contributions that are going into the plan, whether that is an employer contribution or an employee contribution. And you can also see the tax relief at source. So it gives you a little bit more information. Now, if I moved along, for instance, to age 70, what you can also see when you look at the pension detail is any withdrawals that are being made into the plan. And it will split that between tax-free lump sum and also the taxable. And what it also tells you is the lifetime allowance check. What we can also look at is the property. Now, as I mentioned, the property is linked to any mortgages within the plan. And what we can see is that mortgage appear here. So we've got the current value of the property, the debt that is still outstanding, and therefore the equity that is remaining within the plan. So if we go to the debt, we can see that the mortgage is appearing and it shows you the regular payment that is going into the mortgage. If you were making any one-off payments to the mortgage to overpay, you can also see that here. And again, you've got your end of year balance and finally your interest rate. If we had any protection policies within the plan, you would see them here as protection policies, but you could see the benefit amount and the premium that is paid there as well. Here we have a cumulative tax summary for each person within the plan. And if we expand all, you can see much more information, including the breakdown of how much tax has been paid and tax due, any pension contributions that have been made and therefore the higher rate tax relief, the total capital gains tax, and also credits for products such as VCTs, EIS or CDIS. Now finally, what you can also do with the Let's See charts is you can look at dual charts. And while looking at two charts at the same time, you can look at the cash flow versus the assets, and you can see the assets that are underpinning this cash flow in any year simply by hovering over and you can see both sets of details at the same time. Thank you for watching this video, and I hope you found it useful.